The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour right here at TFNN. And I'm your host, Darrell Martin. Make sure you listen to us anywhere in the world, all around the day. TFNN.mobi. And we got some things moving. Gold is one of them. So I got a little bit of chatter about the U.S. dollar selling off if the Fed doesn't taper. But, who knows? So we also had this stuff come in where, it doesn't look like, or it looks like they may taper, simply because, all the, information that came in this morning on the news. So we'll talk about that here in just a second. We got the S&P is currently down 21.5 points on the day. Some big moves. We got the Russell down 16. We got the Nasdaq down 44. Dow down 201 points on the day right now. Oil currently up 72 cents with natural gas up over 2%. Corn is up over 3, almost 4%, up 16.75, 17 points on the day. We got soybeans up 25 points, up 2% on the day right now. Euro dollar is up 8 pips. Aussie dollar down 9. Pound dollar, big move off the news last night. Great news trade. Should have knocked it out of the park if you took advantage of it there. Up 88 pips on the day right now. We got dollar CAD down 11, dollar franc down 20. Euro yen is down 47, pound yen is up 42, US yen is down 45. Gold is currently up 27 points. That's right, 27 points on the day right now. 2% move, 28 points. It's 29.30 to I hear 40. We'll see. But it's moving. It broke that 1350. And it's not looking like it wants to look back. And so one of the funniest things I saw was the whole obituary written on the gold market by Bloomberg, which basically is funny because that's pretty much like the invite to gold to rally. And, that whole, I don't know if you've heard about this, but one of the contrarian indicators out there is when everything out there says bull or everything says bear. When you see doom and gloom or total, like ecstatic, exuberant, like, wow, we're going to the moon, being put in the press. That's the time that the move's over and the reversal's coming. And couldn't have been timed better with Bloomberg's little 5,000 obituary to the bull market. But if you haven't seen that, check it out. And we'll go look at silver. Silver is up 4. That's right, 4% on the day right now. And we got copper is flat. Like everybody's like, I'm not touching copper today. I'm gonna go play in the gold and silver market. So they did, and it has, like I said, been moving like crazy right now. Let's see, what else do we got that we can play with over here? And I'm trying to see any other major news, but right now it's just all the tapering talking and what's going to happen. And it's sort of funny, good news is now bad news. When it comes to the U.S. indices, the U.S. markets, right? Because, come on, we had unemployment claims came in at 320,000 instead of 334. And the inflation data came in, right on target at 0.2. And Empire State Manufacturing Index came in a little negative. And the market just gets hammered. Also, we had pound retail sales. They came in a little better than expected. Let's see, what else do we got? We got unemployment claims at 320 on an expectation of 334,000. We had the Philly Fed Manufacturing Index also add on to 9.3 versus 15.6. So that was not good news either. And but we've had a little mixed movement, and so let's check that out. We'll pull it up and we'll look at it play by play in the market over here. And let me get that screen on, or that chart on the screen for you. So right over here, and you can see this move on the S&P, just right on down. By the way, we're sitting at minus 1.5 deviations right now. So right at the level of 1659.75. It's right where they just sort of stopped and paused right off that level. And was really moving down earlier than the news. So somebody had a clue what was coming, but was moving down earlier already with the negative unemployment claims and everything, and the talk of tapering, good, bad, ugly, who knows. But anyways, moved on down right at that 1.5 deviation level. That's where we're sitting at. Let's go over. Let's look at the Russell. So on the Russell this morning, we got to move right down to 1 deviation. We've just been oscillating right on that level. It was support, and now it's become resistance right off the 1 deviation point. So all sorts of potential trades using that zone. Let's go ahead and check out the NASDAQ market. And let's look on over here. Down 2. That's right, 2 deviations over on the NASDAQ. It's a 96% move. So is it over? Is it all falling? Is it crashing? Well, we were expecting it to start pulling back. And I know that we were looking for, Tommy was even talking about next leg down, here we come. And despite the craziness in yesterday, it decided just to let it all go. And look at this. I mean, it would just move. It started moving down yesterday, that sell-off in the end of the day. And then it hesitated a little bit overnight. And then, bam, just got slammed. So there's our NASDAQ, our tech sector. Let's go ahead and look at the Dow. Dow's been a little bit different on the day, but let's pull it on up. But we got that nice solid bounce on the Dow. But still, along with the others, it was right down to 1, and then right down to 1.5. And it's actually below 1.5 deviations right now. So next target could be 15.040. Probably pretty exhausted at this point, but that would be the next down leg, and what we'd be expecting for it to move on down to that point. And let's see here. Now let's go on over and let's check out a couple other things. Let's look on over at gold and see where gold is currently sitting. And we got to make sure we pull up that December contract. I need to remove the September contract out for me. And so gold up at the 2 deviation level. I don't know if we're going to get anything. So let's find out. Is there anything sitting there that we might be able to take advantage of in the gold markets? Well, there's one way to find out. Let's pull it up. See if there's anything in the contracts here. So I'm on into the spread scanner. Going on over to the binary scanner right here. And let's see, give it a second to catch up. There we go. And I'd say we have a little implied volatility. What do you think, maybe? Based on the massive move that just happened in gold. So you got 1363, you got 1360. You could be a seller if you really want to try it out and see what happens to you. But anyway, so yeah, we got just a lot of implied volatility built in right now. I mean, you can get 6 points away with 15 minutes to go. We don't get that. Like, you don't ever see that. So there's a lot of implied volatility built in right now. This is a perfect example of seeing that. We also have silver coming up with 10 minutes to go. So we can look at both of those charts. We can pull them up and see, hey, which one is just going to be best for us on these trades. So silver just going to the, basically, trying to go to the moon there. It did just do a massive, massive volume spike. We're up there at 23.19. That's probably a big sell-off point, so do be careful on this trade on silver right now because it's going into its close. So I'm going to watch it sort of close, see what we get. But this is one of those trades where you might want to go in and look at possibly one of the close at the monies. It looks like we may be ticking down on silver. It'll be right there at 22.90. So it's right in that range. It's going to be right somewhere between above or below 22.90. So that's going to be the big contract. The direction is going to be the challenge. So we're going to be looking at that one. We're also looking over at some of these, these gold contracts right here. I can't believe just some of the movements we have happening right now. So, but I love it. So I love seeing this stuff happen and seeing what ways can we take advantage of it. Right now I got that one up. That is my silver contract. I am watching it right now. I have not hit the button. And let's go over here. Let's see what else we got on gold. And if we might be able to do something advantageous there. Because like I said, these are just some big moves. And I would like to get at least one or two nice trades right here during the show based on this. We did have the big volume spike, so that's the part that makes me go, maybe we are going to sell. And we're going right into the close right here. We just got to be really, really careful on it. So I'm watching both of them. I'm trying to look at what we might be able to do and seeing if it's going to pull back. But that moving back down, right there you'd have about a $60 trade to sell. It'd be a little bit out of the money at the money. We have 1369. That's actually above the high of the day going into the close, and you can get that for 20 points. Okay, $20 right there. So a pretty sweet trade on gold as well to go short. So there with 12 minutes left to go. And so that's the one that you may want to be looking at over there. So again, that's 1369. As a potential short at $20 would require a 4 or 5 pip move against you in the next 10 minutes. Again, that's a lot of implied volatility, so you can definitely take advantage of it. And then let's see here, what do we got on that? And just trying to see what else we might get that we can hop in on over here on the markets. So this silver one is going to be right on the line, so definitely be careful on it. It's going to be right at the money. Trying to see if we can take advantage of this sort of fast trading. That's how these expiration premium collection trades go. We're going to watch them and see where they're going. But if it finishes down, I would not be surprised to see it actually finish lower, simply because we had a massive volume spike. I'll go back into the analysis for you here in a minute. We'll pull it up and look at it. But let me see if I can get this chart over here for you. So right here, see, we got these big, let's see, I'll add on time and sells, active trader right there. We have this massive volume spike over here, and usually that's going to lead to a reversal. So that's sort of what we're watching as a potential reversal play right there is the reason for the reversal. Because when you get those big volume spikes after a big move, you'll see things flip and go the other direction. So that's sort of why I'm actually looking to sell silver and sell gold right now. Even though they've been going like bullish, 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 bullish the entire time. If we can hop in there and take advantage of it. And, of course, you got to be nimble. So if it does start flying back up, then, just get out of the trade. But if you can, this is an at-the-money premium collection. I've been doing I've done about 2 or 3 of these in the past few weeks, showing the at-the-monies. And then, of course, we got the in-the-monies on the gold contract way up here at 1369. I do like the fact that that one is above right there. Let me see. Let me chart this on here so you can see it. 1369 right there above in the market. I like that. But I got to be ready to get out because gold is it's a little crazy right now. All right, we'll be back right after this break.
Says you can't take it with you. TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
In the money contract. Okay, we got to get our in the money contract on gold. Short 1369. Looking at that pullback. Silver still just oscillating. We're not getting any in the money action at all on that thing. It just is like right above, right below 22.9. So it's like 22.89, 22.91. This back and forth, back and forth. So pretty challenging to do any trades on that one right there. I'll pull this chart up for you right here, let you see what I'm talking about, and put that in there. There you go. See how to be able to see just sort of where it's at. It's just been back and forth the entire time. Just waiting to get, my solid, like I said, I like a solid 5 ticks, and don't think we're going to get it. So, yep, so silver is closed on down right there. But it looks like our the gold contract for the in-the-money contract that we did put on, that one looks solid. And actually, it's there. So we got, I guess, a little bit of time left. You could close that contract out. In fact, I may go ahead and do that just to show you an example of doing this. I went in, I sold 10 contracts at $21.50. Current price is at $4. I can hold it or I can close it. If I close it now, I have no risk of this winner becoming a loser. And so I can go in right there and just place an order to buy them back immediately. So go in and put a buyback, $4, hit place order, and took profit. There we go, $175. So not too bad. And I was hoping we'd get a silver one that would be in the money for us, but we did not get an in the money silver because it kept oscillating right at the monies. So I'm experimenting with the at the monies, like in demo trading. but they're just, something new. You got to get in and, test it out. But gold has definitely been awesome. I wish we had more gold expirations that we could take advantage of. There's even a 1360 right now, but that'd be calling it pretty close. It's about a point away. So you'd be getting about 10 ticks, I guess, on that trade. If you went in and did that trade on the 1360, you give you about 10 ticks. We do have some negative market noise, and we're going into expiration here in just a few minutes. So if it drops down, it could quickly gain some value. So that might be one other one as it keeps moving. One thing I've noticed when I'm doing these premium collection trades is, they will obviously move pretty fast. And so if I can hop in there and, grab them, and as the market's moving, back and forth on all these trades, then I can go in and, potentially if it's just dropping, like oil, like gold right now, it's just pulling down. And so you may actually get more than one opportunity, more than one strike. Like one strike you sold at 25, it dropped down, you bought it back, you free that capital up. You may be able to hop in another strike, buy it back, hop in another strike, buy it back. If you don't see them go down, I bought it back, go back up, and give me another good potential entry, then drop back down. So sort of like a yo-yo. I had that yesterday. I want to say it was on the Dow or the NASDAQ when I was doing it at the end of the day. And it just sort of dropped down, took profit, came back up, hit it again, dropped down again. And they're fun, they're quick, they're fast. You definitely got to, have the heart for them because they will raise your BP level. This is scalp trading at a whole different level. But it's a lot of fun to do. And it's just one of the many ways that you can trade Nadex. So let's see here. What else do we have that you might be able to take advantage of on the end of the day? Okay, so we do have a 1360. That's cutting that one pretty close. Our 69 is solid. So we've locked that one in. The 1360, we'll have to see. There's a 1363, but it's only at like $4. So that isn't going to do you a whole lot of good. And so if you're on the 1360, you're really playing on the line right there, and pretty dangerous. So that'd be playing basically an at-the-money contract. I was hoping it'd go a little bit further down. We got to see a little bit more action there. And who knows, it may bounce back up after that drop. We're getting a little positive market noise right now on the day. And what else do we have that we might be able to do? See if there's anything else, but I really don't see much else. One of the things I'll do is I'll go in and I'll look for any expiration trades where maybe just orders are just hanging out, and see if anybody has any just sort of dead orders in the water. But it looks like we don't really have much of anything even hanging out over there that would be worth hopping in on. So you got people sometimes that'll put trades in randomly. I'm not sure if they know what they're doing, but they'll leave trades in the last 2 minutes. Sometimes they're good trades. Sometimes I guess they're fishing to see if anybody's stupid enough to take them. I'm not quite sure what their goal is on those trades. But it is interesting watching some of the orders that will come through in the last 2 minutes when the market makers pull out and the liquidity sort of dries up. And you just see just random traders that usually have to be a rookie placing certain trades in the market. All right, well, that gold trade worked out well. Made a nice quick profit on it. We'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So we closed that one out. I had one more that did come in. It was close. It was on the line. And I sort of got stuck in it. Unfortunately, it worked. Right there, I had the 1360s on. Closed at 1359.8 on those 10 contracts. So I was able to bring in a little bit of change on that one as well. And let's see here. What did I get filled at on those? I got filled at $35.50. So that'd be $355 on 10 contracts. So plus the $175 we made on the other ones. And that brings us to $530 in about 10 minutes. So not too shabby. This takes a little getting used to. It takes a little work. Okay? But if you'll put in the time and the effort, and you know what? There is a friend. It's called Demo. And you need to do a lot of demo, okay? Lots and lots of demo, because this is a very volatile trade. And if you're not demoing, and you try to hop in on this, you're probably going to lose your shirt, okay? So you really want to demo it, get it down, ask questions, let me know how I can help you, call in, submit things on the help desk ticket, whatever. But ask for, whatever, so I can help you out. But it's a pretty cool trade. The big thing is you just got to practice. More than anything, it's just you have to practice this a lot. Cool thing is you get a lot of opportunities to practice. You get 21 expirations a day to practice on these trades. And if you'll put them together and you'll keep trading them, if you lose, by the way, if you risk too much money, you can't keep trading. If I lose 25, if I go in and I, make 25, lose 25, lose 75, make 25, make 25. If I'll keep trading, if I don't over risk, then I can keep going. And you can even have, one that just nails you, but you can come back from it pretty quick. So, but they're pretty quick, fast. They're cool. And it doesn't matter if you only have like 20 minutes a day to trade. You can do these trades. So you saw, you've seen them if you watch the show at all, then you know that I do these on a pretty consistent basis. But let's see here. But yeah, definitely practice. Get in on it. And so I saw some people saying, definitely I got to practice. So, but it's worth the practice, and the demo is, like I said, is your best friend as you're learning how to do these. Okay, let's see what else is going on in the markets. Enough with that right now. Let's hop on over and let's pull up. So right there, by the way, look at that. We're bouncing right off the 2 deviation level. That was just a give me sell premium collection trade. That was so that 1369 that was the easy money one. Let's hop on over here. Let's look at silver. Right, where is it? There we go. So we got silver right over here, right up, triple deviation move. Okay, that is a 99.7% of expected movement, meaning there's only a 0.3% chance it is going to stay beyond that level at expiration. Well, guess what? Market just closed down, and where did it close at? Right at the triple deviation line. So massive move on silver, but also not exceeding the expectations, going right up to 3 deviations. So it moved up, it hit 1, it paused. It hit 2, it paused. And then hit 3, one big spike, that was that spike we were talking about, came back down to it, settled right at the 3 deviation mark. And we got a 70% move at 1. That's 70% of the time it'll stay within 1 deviation. And then we got around a 96% chance at 2, and then a 99.7% chance at 3 of it breaking that level, or staying within that level. And just, looking a little bit historically on here, you can see 1 deviation. See, the day before that, we did have another big move. So right there, sort of broke up to 2, but then what do we get right here? We got 1 deviation. We got 2 on silver that day. About 1 from high to low. Right there. So as you can see, 70% of the time it's going to stay in that 1 deviation range. Every once in a while, it's just going to explode through it, though. All right, so let's see what else we got. Let's go on. Let's check out soybeans. See where they're sitting at right now. So we got soybeans. We got those plotting in there now in the current market. And soybeans are up to 1267.25. And right there, 1.5 deviation move right there, sitting right at the 1.5 deviation mark. And 1 deviation right there. See where I just paused right at it, right at 10 o'clock. Just boom, just went flat. And then made one last run and pretty much out of steam at the moment. Let's check out the corn contract for December. We got to move right up to 2 deviations. It was a big move on corn today, and you can see that right there. That's a 90, like I said, about 96, 97% probability of all movement range, meaning only about a 34% probability of it continuing on further. And so if you think about this, just to give you the idea, there is a 70% chance it'll stay within a 1 deviation move. So like right here. Okay? So there's only a 30% chance it'll go further than that. If it goes up here to 2 deviations, there's basically only about a 4% chance it'll hit 3 deviations. So it's really, really rare that it'll move further. That's 96% of the expected move would be 2 deviations right there. Okay? And these are not standard deviations. Standard deviations are based on historical volatility, what the market has done. These are implied deviations based on implied volatility. Basically, the market's saying what the market's going to do. Okay? Let's see here. Let's go in and look at couple other markets. We're going to pull it. Let's check out the pound because we had some nice pound news come on out, right? So we'll pull the pound dollar up over here. And let's see. So on pound dollar, we're going to move right on up to 2 deviations, and we had that big pop right off of the news. Let's go in and look at the new stats. I talked about these. We went over these stats yesterday on the show. And so on the news calendar there. And pulled up, we said, okay, so let's look at the pound dollar. And I said, okay, here are the stats. Here's what you need to be ready for this morning. And so we had 2 straddle strangle trades that you could check out. One was enter at 4:30 a.m. on the pound retail sells. Okay. And let me see. Let me pull up another piece over here. There we go. All right, so we got the pound retail sales. They came out at 1.1 versus an expectation of 0.7. Well, 1.2 was going to be a big move. So 1.1, pretty close. So nice solid move right there. But let's go back. Let's look at it and see what kind of move we got. Grab our ruler over here. We're going to go right here to 420 right there. And first we're going to go down. Okay. We only got 13 pips down. But then we're going to go from low to high for the range within 2 hours of the announcement. Okay, so it's going to put us right here at 545. We got 52 pips. Okay. And then we go down here, and I mentioned, I said 5, 6, or 7 o'clock expiration. The issue with 5 is that you're not going to have a lot of time for it to move. The issue with 7 is going to cost a lot more. So a lot of times, you're going to choose that in the middle there, that 6 o'clock choice. And we had a expectation on the pound of an average range of 70 pips, but 70% of the time it moves 50 pips. Well, let's look at it. We had on the pound, we basically had a 1.1. That was a great move. We didn't hit the 1.2. The 1.1 was a great move, but it was just taking its sweet time. So on this trade, probably what happened is you got in and you got out at about break even on the trade, depending upon how you put it on. Now, if you did certain trades like on strangles, if you did binary strangles, I know some traders that did the strangles this morning, and they did very well. If you did a straddle, and you probably got in the trade somewhere around $35 or so, and you were able to make a little bit of profit on the trade, even if you held it to expiration at the 5, 6, or 7. You should have at least pulled out a break even on the trade. So not a bad trade, but we got a lot more volatility when this whole dollar crush thing came out here recently and sort of moved everything. And then we had another trade, of course, come out on the core CPI and the unemployment claims this morning. So the CPI being the big thing that we were focusing on. And let's see, let me pull up the info and stats on that one. So right there, core CPI, we were looking for some decent moves. Euro dollar, pound dollar, whatever. But euro dollar was the main one I was looking at. It had the highest probability of movement. While we're here, we'll go ahead and check out. We got the pound dollar. It went up a full 2 deviations. But it did that. It took its time. So it didn't really move just right off the news. Let me show you this one. This one came out this morning at 8:30. So right here. And on pound dollar, we got about 58 pips. So we had a nice move on it. And, if you chose the 11 o'clock expiration, right there, so it was 9, 10. So now not the 10 o'clock expiration. Right, there we go. Then you would have you would have been okay on the trade. You would have at least broke even. You could have got a little profit there if you would have done pound. My suggestion was to go over and focus on the euro. So let's see how that worked out. Okay, so going over here to euro dollar and look at it and see what kind of move we got. Our 80% of the time we move at least 50 pips on euro dollar, and the average move is 60. Okay, so it's not known for being the biggest mover in the world on the trade, but it is known for definitely moving on it. So let's go right over here. We got our high to low right there, basically at right around 10 o'clock. Let's grab that. We got 89 pips. If we look at, what is that? That is 10.15. Okay, so let's back it up to 10. There we go. Now, the stats are based on 2 hours, so you actually could go down to 10.15. But for the actual, not just the talking about it, but the actual implementation, we'll go right there. We still have a 83 pip move from high to low. Not a bad trade at all. and exceeded its stats, did perfect. Eurodollar was a great, great straddle, and or strangle, either one. If you would have done either one of those with the 10 o'clock expiration, really, if you would have done with the 9 o'clock expiration that moved so fast, it would have been just fine. And really, really good trade. So hopefully some of y'all got to take advantage of that. Let's go over now. There was another possibility, and that was what I call the strangled or straddled butterfly, and it's a little trickier. Okay, it's one that you're going to do like into the news, and you're not going to take a stop. So you need to be able to get at least $50 on the trade. Okay, when you put it on, and so if you would have went in and you would have chosen, now check this out. This is interesting. Okay, now you can't take a stop on these. You just have to let them play out. Because you expect the pop on the news, but you expect it to pull back. All right? Well, let's go in and look, and let's see what happened. All right, so right here to the high, we got 41 pips, okay? To the low, well, let's go with 10 o'clock. Yeah, I guess right there. Didn't really move down at all, so whatever was the short side, you were fine. But look at what happened. If you would have got in this thing, shortly before, like right there, and then we pull it all the way over here to 10 o'clock, okay? Right here, it finished 10 pips higher. And we said, hey, you know what? Go for a range of ideally somewhere around 45 pips, like 20 pips up, 20 pips down. And only 17% of the time does it break 50 pips from high to low. So you could went in a binary butterfly into the news on that trade to be able to take advantage of it. And a very, very cool way to trade the news. And the cool thing is, let's say Eurodollar breaks out, and let's say dollar yen also broke out. Well, if they both broke out, Eurodollar profits, dollar yen loses, they basically hedge each other off. Let's say everything stays flat. Well, dollar yen profits, Eurodollar loses, they hedge off. But let's say the stats line up and what's supposed to happen happens, what we expect to happen. Well, Eurodollar breaks out like we expected, dollar yen basically is flat like we expect. We profit on both. So now there is the possibility that dollar yen could take off and Eurodollar could stay flat. That's pretty unlikely, at least on probability basis. Usually the dollar yen is not the pair that takes off on that. It is the Eurodollar itself. So anyways, there's a few ideas for you. Hopefully you can take advantage of them and start learning how to use these straddles, these strangles, as I call out these stats and give them to you. I also said be aware of the Philly Fed Manufacturing Index coming out at 10 o'clock. That'll add a little bit of volatility on pairs like Eurodollar, pound dollar, that are a little more volatile, based on U.S. news announcements. And we did get, where is that report? I wanted to pull up the number for you because it actually came in. Philly Fed came in negative 9.3 versus 15.6. That'd be negative on the dollar, which is why you'd see the dollar rise right after. It sort of comes in, you get a little spike, and then the thing moves on up. And then a little bit later in the day, we have, let's see what we got tonight. Tonight we got the RBA assistant governor is going to be speaking. Okay? So be aware, he'll be talking tonight at 9:30. That'll cause a little volatility on your Aussie dollar. So you can look at potentially taking advantage of that. As far as tomorrow, what news plans do we have? We don't really have any solid news plans. Well, we have a couple things, I guess. We don't have our normal straddle or strangles, but we do have a couple other plays. So one of them is very unique, and I've been really trying out. I've been testing this out. So we'll talk about that right after this break. Stay right there.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, we'll come on back here to the Diagnostic Trading Hour. Okay, so what do we got coming up for tomorrow? Tomorrow we're going to have sort of an interesting potential trade for you. And I would not be doing these on the spreads. I'd definitely be focusing on the binaries. But you could potentially either do a directional trade or a strangle trade on copper around 8:30 to 10:30. And this is just sort of put the trade in to take profit at a 1-to-1. Not really any big stats on it, just the simple fact that copper is usually highly volatile and moves a lot whenever you have things like housing starts and building permits coming out. So that may be a new trade for some of you, but check it out, demo trade it, okay, and see how that one works out for you. And I'm trying to add in just a little bit more variety, a few more things on here. The other thing, this is sort of a newer trade. I talked about this last month, and I want to try it this month. Has really nothing at all to do with stats. It just has to do with sort of an advantage, I guess you could say. The preliminary University of Michigan Consumer Sentiment Report. Not necessarily just a massive high-impact event, but a lot of times you'll get solid 10, 20, 30 pips off of it, okay? And so you can look at euro dollar or any of the other dollar FX pairs that you wanted to. And but at 9:55, the report's released, okay? So again, the report comes out at 9:55, and there are expirations at 10 a.m. So if there's expirations at 10, it comes out at 9:55, then what does that mean? basically what it means is there's only 5 minutes till expiration. If the trade moves at all, like 10, 20 pips, you could easily be profitable. So if you can go in and do like a strangle, like on the 10, tick wide strikes that expire at 10 a.m. and put it on like at 9:50, ideally dirt cheap, you may be able to have, and I'm talking about like on this, I'm looking at more like a put it on and hold it to expiration type trade. Okay? Put the trade on and you're risking like 20 to make 80. So maybe 25 to make 75. And so that's the trade I'm going to be looking at tomorrow as just a potential setup. And I'm just taking advantage of the fact that the news comes out 5 minutes before the expiration, even though it's a low-impact news event. So just an idea for you to check out, look at, demo trade it, first time around. But then you can keep that one sort of on your list. And I'm just trying to look at, are there any different ways? I mean, I got some of my classic ways, my straddles, and my strangles. And I got my butterflies and my directionals and, everything else. But, sometimes you can find an edge when something like this happens. And you only got a report coming out 5 minutes before expiration. You can get it on really, really, really cheap. And that's just, the idea. So we'll see what happens tomorrow. We'll go over it step by step and lay it out. And but anyways, check that one out. And again, that one comes out at 9:55. So let's go ahead and look at a few other markets before we wrap it up for the day. And we covered our metals. We got gold. We got silver. We go ahead and look at copper right here. Copper's been pretty flat on settlement, but did have a nice move down last night, down to 1 deviation. So we basically, you could say, filled the gap. So, but down to 1 deviation all the way back up. So a lot of volatility, even though when you look on the net change for the day, it doesn't look that big. You got a nice solid move on copper today. And it sort of shot up with everything else. It just didn't look like it simply because, it was pulling back from that massive drawdown. And we can go on over. We can look at maybe a couple other markets where we wrap up. We'll look at dollar yen. Dollar yen moved down, settling after going up to 0.7 on the dot, on down to 1 deviation on the day right now, and sitting at its 1 deviation mark, which is what we expect it to do. And dollar franc is just getting pummeled. It is down right now to 1.5 deviations. All right, stay right there, folks. We've got another great show coming up for you right after this, and I will see you tomorrow at 9 a.m. on the Bull Bear Binary Hour, and again at the Diagnostic Trading Hour at 12, both of Central Time, so 10 and 1 Eastern Time. Y'all have a great day, and I'll see you tomorrow. Bye.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve. Yet, you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.